This is not beating up the US because the US is in many cases one of the cleanest shirts in the laundry. If you start to look at France or Britain, I assure you it's a lot worse than this.
US debt 30 trillion, it's out of control. The refinancing on this is again scaling out of control. Where are we going? Hello and welcome back to another episode of Two Blokes Trading. Today we're joined by Michael Howell, one of the sharpest minds in global macro. He's the founder of CrossBorder Capital and a leading expert on liquidity, the real fuel behind market moves.
Markets are no longer about raising new capital for investment ventures. The primary transactions, 80% of those are debt refinancing transactions. The trend in financial liquidity has got to be upwards because the only way that you're going to afford this debt or the spending is by printing money. Bitcoin is a very, very good barometer of liquidity conditions. And my sense is the Fed is certainly pushing against that idea as much as they can. What you would think of in the textbooks was a 10-year business cycle. This is a 5 to 6 year debt cycle. The problem the Federal Reserve has is that they're the ones that have caused this problem. And you can see it here because this is something we call Fed liquidity, which is the active part of the Fed balance sheet. In other words, it's the bit that creates liquidity. So you're getting a 40% decline in Fed liquidity. And look what happened to the markets. They crashed. What you see is that the gold price, which is, around $4,000 an ounce now, would be $10,000 an ounce by the mid-2030s. And an eye-watering $25,000 an ounce by 2050.